Good afternoon. Let's do some business. We are doing it live and doing more at 4 weekday afternoons for you. We get right down to business here in a news-driven hour after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com, and your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, all your favorite podcast platforms. Well, the month of May 2024 now in the Wall Street history books. Stocks ending mostly higher today with the S&P 500 booking a gain after erasing earlier losses shortly before the closing bell. It was a seesaw session with the Dow rallying today, up nearly 600 points to end the week and the month. Well, yeah, month of May now in the history books, 38,686 is where we stand. The Dow, of course, had a record-shattering month, popping above 40,000 for the first time. Record-shattering month across the board for all the major averages. The S&P 500 ended higher today by 42 points to 5,277, and the Nasdaq slipped 2 points and fell basically flat at 16,735. All of the major averages did pull back for the week, but they posted gains for the month of May. In fact, the S&P 500 was up nearly 5% for the best month we saw since February, while the Nasdaq was up 6.9%, its best monthly gain since November, and the Dow was up 2.3% in the month of May. That was its best monthly performance since December. Of course, bond yields have been in focus this month. The yield in the 10-year note did slip today to 4.51%. We did see mortgage rates ease a bit this past week. Consumer spending wasn't awful in April, but signs of stress on households appear to be emerging now, with consumer spending up 0.2% last month before inflation is taken into account. But after factoring in inflation, spending actually fell slightly. We did get that important reading on the inflation picture today. The Fed's favorite gauge, the PCE gauge. We'll talk about that here in just a moment. It turns out, speaking of inflation, L.A. topping the latest list of least affordable of America's largest cities. I'll discuss that, the latest inflation reading, and what's happening on the business scene with Mark Wilbur, founding member and former chairman of the Los Angeles Business Federation, LA BizFed, former associate dean of the USC Marshall School of Business, and current chairman of Employers Group based here in Southern California. Meanwhile, the face of homelessness continues to change in Los Angeles with a dramatic increase in the number of homeless families these days. We'll get the very latest and how you can help the Union Rescue Mission later this hour with Richard NEWCOMB, Vice President of Philanthropy and Social Enterprise at the Union Rescue Mission. They'll be having their big 5K walk-run fundraiser on June 8th at the Rose Bowl in Pasadena. But let's get right to it here on your money, the markets, and the economy now, and the whole works. Joining us live, Fox News contributor, portfolio manager at Capitalist Big Hedge Fund, author of the book Price is Primary, How to Profit with Any Asset in Any Market Anytime, the one and only Jonathan HOENIG. Jonathan, thank you very much for taking the call to wrap up the week and an epic month of May. Give us your thoughts about what just happened here.
Well, Frank, what a month and, what a day for news. It seems like we fit in an entire summer's worth of news in just a day or a couple of days these days. Yep. But frankly, surprised about the market strength. I mean, delighted to see it. You've never made money betting against the stock market, betting against America. The one thing I'd note that in the midst, as you said, of a record-shattering month for stocks writ large, who's leading the charge? Despite the fact we've had a great run in NVIDIA, it really hasn't been the Mag 7. It hasn't been the technology stocks really leading the charge. I mean, besides Salesforce, which took a big hit this week, I mean, just look at shares of Apple. Yes, they're up, but they're only up about 3 or 4% this year, Frank. But Alcoa, that's the steel producer, is up 32%. International Paper is up 25%. So I see the winds shifting, and it's much more the value stocks, the commodity stocks, and the international stocks, I think, that are leading the charge now.
On there live with Jonathan HOENIG, and certainly NVIDIA having hit record highs this month, pulling back a bit some more from its recent high, which was, above 1,100 recently, down nearly $9 today to 1,096 and change. Hard to ignore that one, but certainly the Dow, with its big performance today, was up nearly 600 points, while the Nasdaq was down 2. We rarely see something like that.
Yeah, and there is a little bit of divergence, Frank. But the NASDAQ, if you look underneath the hood, a lot of those reliable names, I mean, great companies, but stocks that, in my opinion, have simply come too far too fast. I mean, NVIDIA, tremendous company, but it's up 134% in just the last 6 months. It's just the last 6 months. And, of course, up dramatically just that earnings report just a couple of weeks ago. And, Frank, some of our listeners might think, well, I don't own NVIDIA. Look, if you simply own an S&P 500 index fund, which most people have in their 401ks, for example, you've got upwards of 3% in that one particular stock. So, as I said, I do think there are going to be places to make money, but I think they're going to surprise most people after many years of technology stock dominance. Shipping stocks are having a big go of it. We've talked about gold up near an all-time high, and international stocks, as I said, outperforming domestic. So I think you really want to look off the radar screen to try to make money in the market moving forward from here.
Certainly want to explore all of that further with you, and certainly those benchmark bond yields got a lot of attention this month as the yield in the 10-year note and the other major benchmarks moved up. The market got into some headwinds here, and a lot of talk about T-bill and chill this month, right? What are your thoughts about doing that and just riding the bond market with those yields the way they are right now?
Well, Frank, interestingly, for most of the year, we had heard people talking about when is the Fed going to cut rates. But, I'm always looking at price. And prices, in fact, on bond yields had been going up the entire year. They were at one point up 10 or 15% even before we got some of this inflationary data. I have to say, I really do think we're very much like in that period in the late part of the Ford administration, the early part of the Carter administration. Interest rates had come down from about 8% to 6%. This is in the mid-1970s. People thought they had inflation licked, and it wasn't just 5 years later that rates had, in fact, doubled from there. So one of the areas I think you have to avoid, Frank, are bonds. Yields are climbing. Yields across the board are climbing. So, I think, as you said, it could be T-bill and chill, but it also could be just being very weary of taking on any duration. People have lost a tremendous amount of money in recent years buying long-term U.S. government bonds. So even that 5% that seems like a good investment now could be 6 or 7 if this inflation data continues to run hot.
Right, and that personal consumption expenditures price index, which I referenced earlier, the so-called PC index, did rise 2.7% in April from a year ago, in line with economists' expectations, but still hotter than where the Fed wants it to be, which is 2%. And the core index, which takes out the food and energy prices, rose 2.8% over the past year, which was a bit higher than economists had expected. What's your view on where inflation goes from here and what the Fed's next move might be?
Well, fascinating, Frank. You had to have an executive from McDonald's come out this week and tell the public that, no, in fact, our prices haven't risen 100% in the last 4 years. They've only risen 40% in the last 4 years. There had been a meme going around. Basically, everyone is saying the same thing. Look how much prices have risen. And even 40% is a pretty dramatic impact, especially for everyday Americans. Frank, one of the pieces of data that came out this week was that delinquency rate on consumer loans. Fed official Austin Goolsbee talked about watching that as one leading indicator, and that delinquency rate is ticking up near multi-year highs. So, my concern is we always talk about the economy as if it's some foreign object. The economy is simply all of us, all of our work, our jobs, our lives, and the fact that so many Americans are feeling that strain, borrowing more, and increasingly delinquent on their debt makes me very cautious moving ahead. I think about having too many assets on the line when it comes to stocks.
And, of course, politics everywhere these days, and kind of a nervous start today. Market reacted mixed to the big news out of New York, and Trump media shares did fall today. We saw that starting to happen already in after-hours trading yesterday, but given the what's on the political horizon, how do you think the market is taking all this in?
Well, Frank, the country, the market bounced back from FDR dying of a cerebral hemorrhage. Market didn't care about that. Didn't seem to care when Eisenhower had a heart attack or Reagan's arms for hostages or the Clinton impeachment. Thankfully, we are a country not of men. We aren't a kingdom. We're a country of laws, and we're a free economy that I think is much bigger than the political difficulties of any one individual man. So makes for great headlines. You had one pundit predicting an 800-point drop today, I believe, for the Dow. Of course, it turned around and had about a 600-point gain instead. So I think you got to think long-term. Politics and economics that don't always move together in your lockstep. And the thing really that needs to be solved, Frank, is the spending. I mean, until the spending in D.C. goes away, I just don't see the inflation going away. And although it's cooking at lower levels, it's compounding. And I think it's that compounding effect that's really grinding away not just the middle class, but the economy overall, and why I think I've got to be very cautious, as I said. I don't think now is the time to be, as they say, all in when it comes to stocks, when it comes to your investments. We had a piece of data out this week. A record number of Americans now have an interest in the stock market, upwards of 62%. That's a good thing overall, but I think as a contrarian, now's the time to have a little bit of cash, as I said, given how fast and how far we've come.
And you mentioned it, gold also hitting a record high recently. It's pulled back slightly from that record high. And silver, by the way, also just finished its best month on a percentage basis since March of 2023, rising 15%. We've seen silver, gold, and copper all rising for 3 straight months. This at a time when we're told inflation is easing, curiously. Gold hitting record highs, silver at the best we've seen in more than a decade. What about that? What about these precious metals here rising in the face of the supposed easing of inflation?
I think you hit the nail on the head there, Frank. I mean, you have to watch price. The Fed, they say inflation is easing. I mean, aren't they the same ones who said, in effect, that inflation was going to be transitory? We were hearing that years ago. It hasn't been transitory. So, the book Price is Primary is all about watching price and trusting price. And as you said, the fact that gold is up near all-time highs is an indicator that it's likely to hit new all-time highs. In fact, that trend is set to continue. And look, the big moves take time. The last time precious metals were really in a bull market, they went up nearly every year from 2001 to 2011. And I do think that we are in that similar period of time. You don't want to make it an all or none. You don't want to have it as your only investment, but gold, silver, and I also like platinum, PPLT. That's one investment we own over at capitalistic.com, Frank, and it's an asset that tracks the price of platinum, which is at a fraction of where it was even 8 or 10 years ago. So when I talk about diversifying, I think precious metals, again, not an all or none, but I think are a great addition to most portfolios right now.
On the air live with Jonathan Hoenig, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund. And once again, the book is Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Any other investment ideas here, Jonathan? Any other specific places where you are putting money now and or taking it off the table?
Yeah, I mean, well, European stocks, Frank, have been doing surprisingly well. And, one that's very much tied to natural resources overall are shares in Norway. A lot of Norwegian shares are, correlated with fossil fuels or correlated with oil exploration, and they're darn cheap, yielding over 5% to trading at, in many cases, only a few percent over book. So I like ENOR. That's E as an elephant, NOR. It's an ETF that tracks the price action of Norwegian stocks. And you always want to consult a financial advisor, Frank. Do your own due diligence, but true diversification isn't adding a allocation in Microsoft to an allocation in Amazon. That's just doubling down on the same tech exposure. So I think ENOR is an off the beaten path that you could make money in the next 6 months or so.
All right. We haven't heard too much news out of Norway either, so guess things are okay there.
Yeah, I mean, and I think that's the point, Frank. I mean, you want to go where you're not hearing much news. I mean, cigarette companies, for example. I mean, can you think of a more unpopular group of companies that no one likes them right now? But we talked about BTI on your program a couple of weeks ago. Good old Philip Morris. MO is another stock I think you can add to a long-term portfolio right now. I mean, growth has dominated for a long time, but look, there's been periods of 3 years, 5 years, even 10 years when value stocks have outperformed. Value stocks, they're not as sexy generally. It's things like utilities that have been doing very well, tobacco, commodities. We've talked about some of them. I like a wind ETF, Frank. Pretty easy to remember this one. It's FAN, FAN. Again, not sexy like NVIDIA, but I think it's these out-of-favor areas, particularly value stocks, which you can make money in and that aren't yet picked over by the herd.
All right, and of course, I have to ask you this. We talked to the biggest fans as well as the harshest critics of cryptos, and Bitcoin certainly has seen its big run-up to record highs this year and has pulled back recently. Been gyrating right now at around 67,000 here to wrap up the month of May. And Ethereum, of course, also had that big pop this month on expectations that there'll soon be Ethereum ETFs. So what are your thoughts on the cryptos here?
Well, Frank, I've never been a big investor in crypto, but I do believe in price. And when I look at the price action of Bitcoin, it's formed a ceiling up near $70,000 a coin and some support seemingly near about $60,000 a coin. So one easy way to play it is to either play the breakout or the breakdown, meaning if it peaks its head above 70,000, you buy at 70 for the move to, say, 100 or 110 up to there's new all-time highs. On the other side of the coin, if it breaks down below 60, in my opinion, that's the market telling you stay away. At least for now, this is not an asset that's in a bull trend. So Jesse Livermore had that great line. Frank, it's time. Sometimes it's you want to be bullish, when sometimes you want to go be bearish, and sometimes you just want to go fishing. I think when it comes to crypto, now is exactly that time. Go fishing, stay, wait, and watch, and price will tell you the next move.
Or maybe go to Vegas. You see what that Caesar stock did today, moving higher by nearly $4 at 35 and change on a report that Carl Icahn has made a big investment in Caesars. That was interesting. What about those gambling stocks there in Vegas?
With respect to Mr. Icahn, has been very successful as a value investor. I'm not buying it. I mean, Caesars, Frank, is a great example. I mean, this stock has been hitting new 52-week lows since March. And when it hit 52-week low of 39 and 38 and 37, there were many people like Carl Icahn, many value investors saying, oh, it can't go any lower, it can't go any lower. And just look at shares of Walgreens. I mean, Walgreens is a Fortune 500 company. You'd say pretty much a stalwart. I mean, those shares are trading at 28-year lows. So sometimes a great company is not necessarily a great stock. And even Caesars is trading right where it was trading back in 2018. So we're looking at roughly 6-year lows for that stock. You got to go where the action is, Frank. And if I was going to gamble, it wouldn't be on weak stocks like the entertainment and it's like the casino stocks. And it's not just Caesars. I mean, Penn Entertainment, all those gambling stocks have been pretty weak. So I think I'd rather go for the gold than roll the dice on gambling stocks, given how weak they've been.
Got it. And any other specific places where you'd be taking money off the table or avoid at this point?
Yeah, I mean, bonds more than anything. I mean, not to be a Cassandra, Frank, as I said, I mean, you never really know how bad it's going to get. And with D.C. continuing to spend and so many of the floating rate bonds continuing to break out, indicating that market's expecting higher rates, I think you got to be very careful about buying anything longer than T-bills, given the inflationary trends.
All right, Jonathan, thank you very much for not going away in the month of May for us anyway. We do appreciate it and look forward to our next conversation. That is Jonathan HOENIG, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, author of his book, Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan HOENIG, thanks again for taking the call here this afternoon.
Oh, you are the best, Frank. My pleasure. Thank you.
Thank you. Thank you very much, Jonathan. Right after the freeways we go now, 790 KABC. Friends, people like you and me have our ear to the ground on all things business. We like to be informed and indeed well prepared. As important as finance is, I want you to have a plan in case you're hit by someone not paying attention to the road. Thinking ahead serves us well, but even still, we can get caught off guard as people are so focused on their destination that they might not have a plan. If they're in an accident, that's not their fault. That's why I encourage you to put my friend Attorney Clark Fielding's number in your phone. That number is 833-88-SHARK. So if you're in an accident, you'll be ready with your strategy to make Clark Fielding your very first call. Fielding Law aims for the highest possible settlement, considering you might need long-term care, rehab, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of accident, call for a free consultation with Fielding Law. You can trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Motorcycle, truck, pedestrian, scooter, hit and run, boating, or bike accidents, you name it, the number to call 833-88-SHARK. That's 833-88-SHARK, or go to clarkthesharklaw.com.
Thank God it's
Mottek On Money continues here in 790 KABC. Good afternoon. After yesterday's Sure Happy It's Thursday day, we have a TGIF day for the most part today. The Dow nearly 600 points at the bell, up 575. And a seesaw ride for the Dow at 38,686 to close out the week and the month of May. The S&P 500 at 42 at 5,277, and the NASDAQ slipped 2 points to settle at 16,735. All the major averages attained record highs during the month of May. It was eventful, as we just talked about with our friend Jonathan HOENIG, live on the air here just a few moments ago. In the month of May, we did see the S&P 500 wrap up the month with a gain of 4.8%, the best month since February. The NASDAQ climbed 6.9%, its biggest monthly gain since November, and the Dow rose 2.3% in the month of May. That was its strongest monthly performance, by the way, since December. The yield in the 10-year note now at 4.5%. Silver has been hitting 11-year highs lately, pulling back today by nearly $1 at $30.56. Gold down nearly $19 at $2,347.70 an ounce after hitting record highs above $2,400 recently. Among the winners today, we saw shares of Caesars Entertainment up nearly $4 at $35 and change on reports that Carl Icahn has made a big investment in Caesars, placed a big bet there. NVIDIA, of course, a star this month, hitting all-time highs above 1,100, slipping again today, down nearly $9 at $1,096.33. Taking a look at the crypto world, we also saw Bitcoin, of course, see a wild month. Right now it's down about $73 at $67,481. Ethereum hovering around $3,767, down about $20 now, and Doge at 16 cents. And now let's get the latest news for you here on 790 KABC. Mottek On Money continues here on 790 KABC, turning out from Wall Street to Main Street. In fact, your street. It turns out L.A. topping the latest list of least affordable of America's largest cities. Latest inflation reading out today, coming in hotter as far as the core rate, the PCE index, which we're told is the Fed's favorite inflation gauge, coming in a bit hotter than expected. The other reading pretty much in line with expectations, rising pretty much in line as expected in April, with markets still on edge over when interest rates might start coming down. Also, new concerns about artificial intelligence and the impact on businesses as well as individuals, so-called deep fake content in the form of fake visual or audio pieces becoming more widespread as AI technology advances or degenerates, as the case may be. And it looks like Sacramento is now looking into this and focused on scammers who are literally using AI to rip us off these days. A lot to unpack here. Let's bring in Mark Wilbur now, founding member and former chairman of the Los Angeles Business Federation, LA BizFed, which of course covers all things business here. Former associate dean at the USC Marshall School of Business, current chairman of Employers Group, based here in Southern California. Mark, great to have you with us here. Thanks for taking the call this afternoon.
Good. Thanks for having me on, Frank. Great to be on.
Wonderful to have you with us. What's the business buzz these days in reaction to the latest inflation reading, interest rates, and all things business here this afternoon?
There's just no yield with inflation right now. It is just continues to grind everybody down. Makes it very, very tough. And, when you're in a city that's already expensive, as you saw in the Realty Hop study that came out today, or maybe it was yesterday when it was released, Los Angeles is number one. I mean, I honestly, I didn't think we'd end up being number one. I expected us to be in the top five, maybe just top 10, but no. Los Angeles leading the way, even above Miami and New York. So, so then when you have inflation and everything else on top of it, it just makes it kind of a sad moment, to be honest, because you and I both love this city and we love being here, and it's just taken a pounding, and it continues to do so.
How are businesses responding to that when you're trying to attract talent from outside the area, and you put out a number and wait a minute, it's the least affordable place in the country to live? How are businesses dealing with that?
It makes it very hard on the recruiting front. Employers Group, as you know, spends an enormous amount of time in the HR world, and it makes it very, very difficult for recruiters to try and convince somebody to move here from other places, especially if those states are, tax-free zones, like Nevada or Texas, those kinds of places. It makes the argument almost unattainable to get through, because, you're asking the person not only to, come to a more expensive place, but also, by the way, we're going to tax the heck out of you while you're here. So it makes it a tough argument to get somebody to move. But, to be honest, Frank, the other big issue is crime. If we don't start putting some of these people away and dealing with it in a much more stringent manner, it's just that you're seeing so many businesses closed up. I cannot remember a time that I've driven through the city and seen so many places that I went to, places that I'm familiar with, boarded up, closed, lights off, out of business. And it's, you read about it, but, it's really starting to become a reality. And I don't think legislators really focus in on just how difficult it is to replace those businesses. These are long-term businesses. We're not talking about, some startup out of a garage. We're not talking about Packard Bell, way back when. We're talking about restaurants and manufacturing companies and people that have been here for a very, very long time, either packing and leaving the state or shutting down altogether, especially in the restaurant industry, where it's almost unattainable to try and stay in business. It's very, very difficult right now.
You're live with Mark Wilbur, telling it like it is, as always, and we appreciate that. And now add AI to the tally. We've been hearing all these great things about what AI is going to do, but also on the flip side, scammers, people falling for deep fakes and all this, deep fake related video and audio content, all related to AI. How's business responding to that?
Well, they're responding as fast as they can, but it's one of these things, Frank. Every time we get smart and invent something amazing and create a value increase in our economy because of it, you look back over decades. The invention of the computer, the invention, the extension of the internet, the leverage of the internet. I mean, all these kinds of things that have happened over time. So here we come upon AI, which is just an amazing type of technology to leverage in so many positive ways. But then, of course, right behind it come the folks that want to use it in inappropriate ways. So when people hear the term deep fake, I don't know if they actually understand what that means. Like, for instance, if you got a kid that's online a lot and they love to shoot their videos, their TikToks and what have you, and their voice is out there, you can have people come and listen to those TikToks, actually take that audio file and create a phone call to a parent that is mimicking that voice and leverage that to ask for money. Hey, could you give me access? Could you help me with this? It's unbelievable, the things that are going on right now. They'll also take screenshots of the face and things like that. So people really need to take a step back and really think about how much of themselves are out there on the web for people to take and turn against you. Rob Bonta, the Attorney General, covered a lot of this, and it's gotten so bad that when the Attorney General is getting up at a podium and covering it, there's a real problem going on when it's getting that kind of level of attention.
Mm-hmm. Yeah. Add that to the crime tally as well, which you referenced, and certainly we've seen some horrific examples again recently, which we talked about this week. But certainly on the crime front, we want to stay on top of what's happening, and this has impacted insurance rates. I've been hearing myself from a lot of business people complaining about the rising insurance costs here, and people even being reluctant to report crimes at businesses because it could lead to higher insurance rates. Is that what you're hearing as well?
Not only higher insurance rates, or just losing your insurance altogether. Yeah. State Farm arbitrarily, well, they didn't arbitrarily, they chose 72,000 people to just stop their coverage on their homes. So you're having insurance companies take kind of extraordinary measures because they can't get the rates up. So you have this, Newsom put this proposal forward, Governor Newsom, to streamline and allow for the ability to increase rates more quickly to respond, because I don't know if people don't realize it, but it takes upwards of 2 years to get a rate increase. So he's trying to deal with that, but at the same time, As soon as you put that in place, then people are screaming that now you're going to, just jack our rates up and it's going to cost a lot more money. Well, it's already costing a lot more money because you have insurance coverage leaving the state of California. And when there's less competition, guess what? The prices go up. So it's one of these scenarios where they're trying to respond to it. There is not a pretty answer in trying to resolve that, Frank. It's one of those situations that needs to be addressed. But, the insurance is a huge issue because you have to have it in California.
Certainly, Mark. Well, thank you very much for telling it like it is. You command a lot of respect for that reason, and we appreciate it. Mark WILBUR, founding member and former chairman of the Los Angeles Business Federation, LA BizFed. Yes, sir?
I don't know if you got 1 second, but I got to tell you, it's not all bad news. The CFO of Costco came out and said the $1.50 hot dog combo is safe. So for all those people out there loving that combo, because it made literally front page news. So, the CFO said the $1.50 combo at Costco is safe. So you know what? It's not all bad news out there tonight.
That's good. Well, heading into the weekend, we needed that, even though bananas went up from 19 cents to 23 cents at Trader Joe's. So we can take that hot dog news. Consumers not in as much hot water as they were earlier today. So until we got that. Mark, thanks a million for joining us here this afternoon live on Mottek On Money, 790 KABC. Mottek On Money continues here in 790 KABC. The inflation numbers we've been talking about have actually been crushing as families are no longer able to afford rents here in Los Angeles. You heard the big news about Los Angeles being at the top of the list for least affordable major cities. And the face of homelessness continues to change here in Los Angeles with a dramatic, heartbreaking increase in the number of homeless families. The Union Rescue Mission in downtown Los Angeles is at the forefront of all this, helping homeless men, women, children, and seniors, and doing so without government help for operating expenses. They're getting a lot of attention these days because of the highest rating they've received from Charity Navigator at a time when government spending on homelessness is under tremendous scrutiny for inefficiency. Let's get the latest on what's really happening out there now with Richard NEWCOMB, Vice President of Philanthropy and Social Enterprise at the Union Rescue Mission. Richard NEWCOMB, thank you very much for taking the call here this afternoon. Take it from the top and give us an update on what's happening.
Thank you, Frank. Thrilled to be on your show, and really appreciate this opportunity. Well, there was what's the latest on homelessness in the city of Los Angeles? The count numbers came out June 29th last year, so we're anxiously awaiting what those results are. But there was an article in the LA Times 2 weeks ago, and they actually had the loss of numbers for family homelessness, which you just referred to, and the challenging rents and inflation. And in that article, they said that LA County homelessness had climbed from 1,257 families in 2023 to 1,817, which is a 45% increase in families. And so that's a pretty scary number. Family homelessness the year before, 22 to 23, was only up 14%. So I think this says a lot about what's going on in the economy and what's happening with inflation and the cost of housing here in Los Angeles County and the metropolitan area. It is really, really putting a lot of pressure on families. We opened our Angeles House Family Center in South LA 2 years ago, and we're seeing a dramatic increase in families coming to our door. And at that facility in particular, the folks that are coming there are struggling financially, struggling with credit ratings, and can't come up and save enough money for a deposit, and can't clear credit. So that's a lot of folks like that are coming to our doors right now.
And it should be noted, no alcohol or drug use is permitted there at the Union Rescue Mission or at any of the facilities, including Hope Gardens and Angeles House. I know you've told us in the past, and therefore cannot accept government money for operating expenses. You're totally reliant on private donations and business support, right? Tell us more about that.
Correct, Frank. The harm reduction model, if you take money from the city, county, or state, you have to operate your facility under the harm reduction model, which means people are allowed to use drugs and alcohol. Last night at URM in our 3 locations in metropolitan Los Angeles, we had about 1,300 under roof last night. Over 800 of those were moms, dads, and kids, and about 150 were seniors. So what type of environment would we have in these 3 facilities if drugs and alcohol flowed freely and you had 800 moms, dads, and kids and that many seniors? So we don't embrace that policy. We have tried to get to the table with leaders from the county. We had the mayor here about a month ago, and we just don't get resources from that. We're trying to get to the table, have that kind of conversation. Like you mentioned, we get a perfect 100 rating from Charity Navigator. 85 cents of every dollar is going to life-changing, life-saving programs here at URM, and we've been doing this for a long time, and we do it well. So we'd love to get some support from our government entities, but we haven't been able to. So that's why we need the support of our friends and supporters throughout the city to help us do this work. We're worthy of that support, and we hope we can rally more people to our cause to help us do more.
Well, you're reaching an important audience right now, Richard NEWCOMB, so we'll continue to get the word out here. And also an important fundraiser coming up a week from tomorrow on June 8th at the Rose Bowl in Pasadena. This is the Union Rescue Mission 5K, the URM 5K Walk Run. Tell us more about that big event coming up.
Yes, this is our 6th year doing this, and we started at LA Live, and now it's turned into a run walk. It was a walk only, and we have quite a few runners signed up, quite a few walkers, but we'd love more folks. We actually have a $500,000 matching gift for this event if we can reach it. Right now we're at about knocking on $280,000, so we're hoping the next 8 days, Frank, to raise another $220,000 and reach and earn that full match. That'll give us $1 million, which would help us do a lot of great work here at URM. Every dollar would be matched, and I saw today, Frank, because I see everybody who signs up that you're going to participate. So we're thrilled to have you as a participant. And I hope you can rally your friends and family to donate to you as well. But it'll be a great day. Every dollar will be matched. And everybody who participates is that they win a raffle ticket, and for 2 electric bikes and an electric scooter that we're giving away. The fastest finishers in the race get $200 running shoes. We'll have games, food trucks, and a medal for every participant, and really nice medals for the.
Wonderful, Richard. Well, thank you very much, Richard NEWCOMB at the Union Rescue Mission, for that important update. Count me in. I look forward to seeing all of our great listeners there at the Rose Bowl on June 8th. And you can get more information about that, by the way, at urm5k.org. This is Mottek On Money. Stay tuned now for the 790 KBC News Blitz with Randy Wang on 790 KBC.
The Bigger Pockets portfolio of podcasts are worthy of your investment.
We're having a real conversation as real estate investors.
New episodes available every day.
It's important to buy where it makes money and not necessarily where you want to travel to.
Bigger Pockets, On the Market, Rookie Real Estate, or Money Podcast.
The purpose of flipping is to create more cash so then you can reinvest into other types of properties.
The Bigger Pockets Podcast on YouTube or wherever you listen.